Hello, my name is Steve Bigelow with the Candlestick Forum. Market direction may have hit where the markets may be in a profit-taking mode. Notice what's happened from when we had the piercing signal right here off the 50-day moving average. Stayed in this uptrend above the T-line until our next target, the 200-day moving average. Yesterday it hit it. We kind of projected there might be some profit taking at this level. And notice it did a doji today in the overbought area. This allows for a much more prepared strategy, knowing the doji rule that the price of the is usually going to move in the direction of how they open after a doji. If it opens lower, we can assume there's profit taking here at the 200. Look for it to come back for a day or two back to the T-line area. The NASDAQ got up here toward the overbought area, and we had doji. There might be some consolidation, at least back to the T-line. So look for some profit taking. However, there's still the patterns working very strong. Look what happened in American Airlines today. There's your fry pan bottom with a little J-hook pattern. Just identifying this would have put you in the right position at the right time to be in a big price move. Our recommendation on CPA over the last few days was based upon the fry pan bottom. Notice how it stayed above the T-line. Then over the last few days, it did a doji sandwich right here at the breakout level. What do we expect from a doji sandwich? More upside. What do we expect from a fry pan bottom breakout? Strong upside. So you can still be buying this one with the expectation there's a gap at the $65 area to fill, and then the 200-day moving average up much further. This is basically just putting all your stars in alignment. See the J-hook pattern, the doji sandwich breakout of a fry pan bottom. These are all indications that the probabilities are that this price is going to move higher. The opposite, if you think the market is getting toppy, or we see that the 200-day moving average is acting as resistance, the opposite of a fry pan bottom is your dumpling top. IMMU can be shorted on weakness tomorrow with the expectation there's your first target. And what do we expect coming out of a fry pan or out of a dumpling top? The same thing, but opposite on a fry pan bottom, a very strong price move to the downside. This is what we call 2+2 or convergence analysis. As we can see in Dave and Buster's, there's your fry pan bottom. There's your J-hook pattern. And there's your breakout of an obvious resistance level everybody else is watching. These are situations where the investor sentiment can easily be visualized by the patterns, whether it's a fry pan or a J-hook or both, and the fact that it breaks out through a specific resistance level that everybody else is watching. Again, just puts you in situations where the probabilities are much greater that investor sentiment working the same way time after time is going to put you into a trade that has much better upside prospects. So tomorrow will be very important to see how they open the Dow, the pre-market futures. If it's strong up, it's telling us that the 200-day moving average is not going to act as resistance. If it's down, it's telling us you probably want to start taking some profits on long positions and at least see if they're going to back to the T-line. That'll be it. We'll see you in the chat rooms. However, we are going to be doing a training session this weekend, June 6th. It's one of our mini trainings, but we're going to be concentrating on how you utilize the candlestick signals and patterns to show where the optimal spots are or price levels to get a breakout so that you're in at the ultimate time. We'll see you in the chat rooms.